Well, hello everyone, and welcome to another special event here on StockCharts TV, charting forward our 2021 market outlook. Really excited to be here with you today as we kick off the new year. We're going to get into it with a big special here. We have a collection of great analysts coming to you to share their thoughts on what's going to happen in 2021 and outlook for the new year, where they see the markets going, and how they're watching it on the charts. So we're going to get into all of it. We've got a great lineup for you here today. Of course, my name is Grayson Roze. I'm going to be your host for today's show. I'm the Vice President of Operations here at StockCharts.com. And just so excited to be with you today. I am just blown away by the lineup here that we've organized. Our StockCharts TV team really getting after it again with another special here, the 2021 Outlook. So on today's episode, we have Tony Dwyer. Tony is the Chief Market Strategist at Canaccord Genuity. We have John Markman, the Director of Markman Capital Insight. Really excited to have John on the show for today. We have Gina Martin-Adams. Gina is the Chief Equity Strategist and Director of Global Equity Strategy at Bloomberg Intelligence. Thrilled to have Gina with us today. Craig Johnson, a good friend of ours, the Chief Market Technician at Piper Sandler. Always a blast when we get Craig on. So really excited to hear his thoughts in our 2021 outlook. We also have Samantha LaDuc, the founder of LaDuc Trading, an expert that we love to work with. Great fun to have Samantha on the show today. Rick Bensignor, the founder and chief investment strategist at the Bensignor Group, true market whiz, someone who's been doing this for a long time. Excited to hear Rick's thoughts in our 2021 outlook. And finally, we have Mary Ellen McGonagle, a close friend of ours, of course, the founder of MEM Investment Research. So with all of these experts coming together, we really do have an amazing lineup here for today's special on StockCharts TV. I'm just blown away by the group that we have and can't wait to get into it. So this show is going to work a little bit different. We have a new format for you this time around as we do our 2021 outlook. I think it's going to be something pretty powerful. What we've done is we've gone ahead and organized 6 different questions. We're going to ask each of these analysts the same 6 questions. Now, they're all forward-looking about what's going to happen in 2021, where the markets are going. So we're going to get their answers to each of these 6 questions and put those together. So back to back to back, you're going to hear from each analyst as they answer the same questions all in a row. It's going to be a fast-paced format, but I think it's going to be a lot of fun, and hopefully you're going to get a lot out of it. I know these experts have a lot lined up for you today. So let's get into it. Our first question of the show, a big one. What do you expect will be the top performing S&P sector of 2021? So we're going to take it away here. Let's hear from the experts and get their answers to the top performing S&P sector of 2021. Here we go.
So for 2021, the top performing sector or sectors should be the same ones that have benefited in the last 6 months of 2020. It's those that have the they're the beneficiaries of this excess liquidity that is fueling this synchronized global recovery. So it would be the more cyclical oriented sectors like the financials, the materials, the industrials, the energy, the consumer discretionary, those areas that benefit from increased economic activity.
In 2021, I think the top performing S&P sector will be financials. They've started to move out to the upside, both in absolute price terms and relative price terms. But I think interest rates could likely go well higher than people think, and even cross back above what had been all-time lows, which we could put, let's say, at 1.4% plus or minus 10 basis points. So I think in a perfect world for yields, which is not a perfect world if you own the bonds, I think yields could surprise people and go well higher than expected by most. So I'm going to say you could get as high as about 1.85% this year during the course of the year. And that would really surprise a heck of a lot of people.
We run a sector scorecard that actually relative ranks all 11 sectors of the S&P 500 on a combination of technical and fundamental factors. And sequentially over the course of the last year, we've been seeing the sector scorecard get more and more aggressive. The last time we ran it in November, the top 3 sectors were financials, industrials, and materials, so a very strong cyclical tilt. And the bottom three sectors are utilities, consumer staples, and real estate. So it's definitely giving us a signal of stay aggressive, stay cyclically tilted for 2021, at least here at the start, and generally underweight those defensive sectors that are naturally going to lag as the markets recover to anticipate economic recovery over the course of the year.
So in terms of the best performing sector for 2021, right now we're recommending to be overweight tech, consumer cyclicals, and industrials. If I had to narrow this down to one of those three sectors, I would say that industrials would be one of the top performing sectors for 2021. If I had to say what would be perhaps a close second, I think financials will probably be a close second, as we think that interest rates will probably work their way higher throughout 2021 toward, say, 150 to 175 on the 10-year bond yield.
I think it's going to be a very interesting year as the U.S. economy continues to recover from this unprecedented pandemic. And while we're beginning to see recovery groups such as financials and oils spring to life, I think that it's a group that led us last year that will continue to be a leader into 2021, and that is the technology sector. We're looking at a daily chart here. A lot of that has to do with a continued migration among corporations to cloud technology, as well as 5G getting rolled out nationally, as the need for faster speeds among distance workers and students is going to remain in place for most of 2021. In fact, Facebook and Google are not anticipating opening their offices until September at the earliest.
What do I expect will be the top performing S&P sector in 2021? Commodities. And I like oil, platinum, uranium, with biotech close behind as a sector of equities.
Well, there you have it, the top performing S&P sectors, what our group of experts expect to see in 2021. Now, we're going to move from the U.S. markets to a little bit of a broader question. Here in our next question, we're going to ask, between the U.S., the EFA index, which of course is Europe, Australasia, and the Far East, and emerging markets, what do you expect to be the top performing index in 2021? So we're going to step back from the US, step back from those sectors just a little bit and look at the world as a whole and see where our experts are expecting to find most strength in 2021. So here we go. Let's take it away.
So in terms of looking at international versus domestic indexes here in the States, I think the first consideration we have to think about is, where is the US dollar going to be trading? From our perspective, it looks like the US dollar is weakening at this point in time. So if we're going to see a weaker US dollar, I would think that emerging markets will probably outperform domestic markets in 2021.
Out of the global indices in 2021, we think the emerging markets are going to continue to outperform like they did in the second half of 2020, because again, it is fueled by this excess liquidity. And it's excess liquidity, not just in the US. We love to believe it's just about us in the US at times. This is liquidity provided by every major central bank around the world. So that fuels global growth. So investors want to go into those areas that have higher growth, higher risk, when there is this kind of money flowing.
In terms of the global equity market outlook, our global scorecards are pointing pretty strongly towards emerging markets as having a banner year in 2021. This is the first year since 2018 that emerging markets have really popped up toward the top of our relative ranking methodology. Most of that is because of emerging markets' sort of natural position in the lead when risk tolerance emerges. Coming out of major recessions, we see risk tolerance start to emerge, and that tends to benefit the emerging shares, given that they're risky areas of the globe. But also the dollar breakdown is really key. The emerging market equity shares are very closely correlated to the dollar. So as the dollar weakens, it improves the relative outlook for emerging market equities.
So as far as the top performing index geographically between the S&P, EFA, and emerging markets, I actually think it's going to be EFA, Europe, Asia, Far East. For years, the US market has outperformed. Emerging markets are finally starting to get a bid, and a decent bid. In fact, they're close to all-time highs breaking out because of the dollar declining. But I don't think the dollar necessarily has a lot more to go to the downside the way most people do. So my downside targets for the dollar this year were 89.23 to about 87.40. We hit 89.21 last week. So we've already hit my initial downside target, and we're starting to get a minor bounce from there. The biggest consensus macro trade coming into 2021, if you look at the strategists and the economists across the street, is that the dollar would get hit hard this year. Because that is such consensus, I'm thinking that that may very well not happen. And it's similar to what happened in 2017, when newly elected President Trump at the end of 2016 gets nominated. The dollar shot up, and going into 2017, being bullish the dollar was the #1 macro call on the street as far as consensus across strategists and economists. The dollar peaked that year on the first day of trading in January 2017 and got slammed the balance of the year and virtually closed on the low. I don't think the dollar has immense reason to rally this year, but I do think that it's not going to fall the way people think. So I actually don't think emerging markets are going to be the best play. I think ETHA will be.
Between the US and Europe and rest of world, where do I think the top performing index will be? China over US and Europe.
We're going to take a quick look at a chart with the US dollar in yellow relative to the index for emerging markets, and we can see the correlation as the US dollar weakens. These emerging markets do outperform, and there is an anticipation that the dollar will continue to weaken well into 2021, which is of course bullish for a continuation uptrend among these emerging markets. However, there is and are going to be speed bumps among these emerging markets as the vaccine is not anticipated to be rolled out until 2022, primarily because of distribution, a lack of distribution, as well as cooling processes that are needed to keep these vaccines relevant. So I do believe that among the broader market indices, we can see the NASDAQ here going into March to December being an outperformer, and here are the emerging markets. I do think that we will see a continued outperformance among U.S. companies, and in particular, the NASDAQ.
All right. Well, we've taken a look at the globe as a whole, looked at where these experts think we're going to find strength in 2021. So let's zoom back into just the US. Let's look at between the large cap, the mid cap, and the small cap groups. What do you guys expect will be the top performing market cap group in 2021? That's our next question for the experts. So let's see what they had to say about which cap tiers are going to lead in 2021.
Our work has pointed towards small caps really since April of last year. April 2020, we saw a very strong backstop put in by the Fed for small cap shares. What we've historically seen is when the Fed expands the balance sheet or eases policy, just like in 2009, they did that in 2020, that tends to benefit small caps. Then we started to see small caps accumulate even more evidence of likely outperformance in the form of an earnings rebound, a revenue rebound. Over the course of 2021, we anticipate that small cap revenues should outpace large cap revenues for the first time since 2017. This should help elevate small cap performance and keep this group atop the rankings when it comes to market caps.
We're starting to see a rotation out of large cap into mid and small cap. And I think this is really going to be driven by the change of direction of interest rates. If interest rates are moving up, I suspect you're going to see more mid and small cap indexes outperform your large cap indexes because there's a larger breakdown of financial companies inside of those mid and small cap indexes. And hence, they should outperform in 2021. It will not be the year of large cap. It'll be the year of mid small cap.
In 2021, I think the best market cap group is going to be what's worked in the second half again. It's those areas with higher risk, high reward. And why would you take higher risk? Because we have so much money coming into that has come into the system. Between the fiscal stimulus, the monetary stimulus, and the interest expense stimulus, people don't count that, but the interest expense from taking advantage of low rates, issuing corporate debt, that there's really these three forms of stimulus are creating growth. When you have such high levels of growth, you want to go with a small cap over the mid cap over the large cap.
So in 2021, when we take a look at the market capitalization, you have the large caps, the mid caps, and the small caps. If you ask me which one you think is going to be the best, I'm going to say it's not large caps. It's small to mid. Not sure which one's going to outperform, but I think either of them are going to do better than the S&P. So that's where I probably focus the bulk of my new investments this year.
Between large, mid, and small caps, what do I expect will be the top performing group? Small, then mid, then large.
We're looking at the NASDAQ, the Russell 2000 small cap index, which is in blue, and then the S&P 500 down here in green. And this is a period from 2003 to 2015, and we can see that small caps do have a very strong history of outperforming the broader markets. And if we move to a more current picture, we'll see that this blue NASDAQ has relatively underperformed going back since 2014 into January of this year. I think it is now time for small caps to shine. They do relatively outperform during periods of economic recovery. And then also when you look at the breakdown among small caps, 13% are financials, 16% are industrials, and these are recovery areas of the markets.
Well, there we go. We've taken a look at some of the different market cap groups between large, mid, and small caps for the US and asked our experts which one they think is going to be the strongest for 2021. But now let's zero in on one in particular. Of course, the S&P 500, the big daddy of the group, the biggest index, the large cap stocks. Let's ask our experts where they see the S&P 500 specifically going in 2021, what their year-end target for the S&P 500 is going to be here in 2021. So here we go. Let's get to it.
When it comes to year-end targets, I'm generally not a big fan of trying to guess 12 months out where the market's going to be 12 months forward. There's a lot of stuff that can go on along the way. Just take a look at what happened in 2020 and the huge decline into the March lows, and then, of course, the fantastic rebound since. I think for most people that would have been very difficult to anticipate and kind of try to guess where the market would have been. In fact, if you look at where the consensus estimate was on the street for 2020 going into 2020, it probably was about 500 S&P points lower than where the S&P closed out the year. So guessing year-end targets to me is something I've been asked to do in my career over my 40 years on the street. I generally answer similar to as I did now, but if you want me to pick a number, I'm going to put something that's maybe just a tad higher than where we closed last year, so I don't think it's up much. I'm going to put it somewhere very close to where we are right now. And that's not because of anchoring bias. It's just because I don't think we go up as much as people think we will. So I'll say 3,800, virtually where we are right now.
While we stopped issuing targets for the S&P 500, we want to look at the conditions that are present to create upside for the S&P 500 or the market as a whole. We're going to have a significant earnings recovery, even with COVID-19 affecting growth in the first half. The amount of monetary, fiscal, and interest expense stimulus that is coming into the market is going to allow for strong economic growth in the second half and into 2022. And that significant upside to earnings should offset any valuation stall that comes with expectations for a little bit higher inflation. So we think it's going to be a pretty good year. By pretty good, plus or minus 10%.
We don't actually have year-end targets for our markets, but we do run fair value models. And these fair value models give us a reasonable expectation of what to expect for stocks over the course of the next 12 months. Currently, we're anticipating still persistently low interest rates, but nonetheless, interest rates inching a little bit higher. Really tight credit spreads to maintain throughout 2021, particularly relative to the blowout in credit spreads that we saw in 2020, and an earnings recovery to emerge over the course of 2021 and 2022. Those factors together combine in our fair value model to suggest that as long as we see double-digit earnings growth, we should continue to see prices rise for the S&P 500. The upside target for us right now is 4,000, based upon the idea that PEs remain well supported by those interest rates. And as long as earnings can recover to the degree that analysts are anticipating, 4,000 seems easily within reach for the S&P.
For those that have been following our work for a while, it is a bottoms-up model that we use to derive those price objectives. We've been using the same methodology for over a decade now, and it has been a successful methodology to forecast year-end objectives. It typically does a nice job looking out 6 to 9 months, but 42.25 is what we're looking for. And I remind investors, we don't believe that we're going to be going there in a linear manner. I think it's going to be a year where we're going to definitely see perhaps a weakness in the first or second quarter, and then a sort of strong finish at the year end of 2021.
And it is my estimation that the year-end target will land us at around the 42.82 range. That's about a 12% gain from current levels. A lot of that has to do with historical precedents as far as the performance in the first year of a newly elected president, as well as in a market that's in a recovery phase, and looking at the markets coming out of a recession.
All right. Well, we did a year-end target there for the S&P 500. Of course, one of the most important indexes to watch. But let's take a step back from just stocks and look at gold. We wanted to ask a really similar question. Expected year-end target for gold, where these experts see gold going by the end of 2021. So let's see what some of our friends on this panel had to say, their year-end target for gold in 2021.
My expected year-end target for gold is also going to be very hinged upon what happens to the dollar. If I'm right that the dollar does not get crushed the way most people do, then gold's going to have a hard time really rebounding, and it may not even get a chance to test its all-time highs that were made in 2020. So if I had to guess where gold would end this year, I was going to put it 1775, a little lower than where we are now.
Our commodity strategist at Bloomberg Intelligence is actually quite optimistic about the outlook for all commodity prices, but in particular precious metals. He doesn't necessarily produce a price target for gold, but does actually see gold outperforming equities. Contrary to my view that stocks should continue to perform well in 2021, our commodity strategist thinks that gold is the place to be.
In terms of gold, at Piper Sandler, we don't have an official year-end price objective for gold, but what we're seeing with the charts in terms of gold itself, I suspect that we are at a point in time. Gold is starting to move higher. We've retested the upward trending 40-week moving average on gold. It looks like a spot where we're setting ourselves up to go back and retest the old highs, a little over 22,400, is where I would suspect we could retest those levels once again sometime this year. But again, we don't have a firm wide view on gold or a year-end objective on gold, but it does look like perhaps the lows are set for now.
So what is my expected year-end target for gold? At some point this year, I believe gold will be closer to 1,500 than its 1,900. And I believe the GLD will become close to that 150, 153.
And I do believe that gold prices are going to end the year higher. We did have this knee-jerk pullback in gold after the runoff elections, gave the markets a sense of stability. However, many of the elements that pushed gold much higher in 2020 remain in place, and a lot of that is the weakness continuing in the US dollar. We are going to continue to see uncertainty surrounding the current economic recovery, and gold is, of course, a safe haven. And then central bank stimulus, which will push interest rates down and in turn make gold a more favorable asset.
Well, there you have it, our 2021 outlook charting forward. What a group to have on the channel. I hope you enjoyed that format. I know I did. It was a blast to get these answers from such a great collection of analysts and to hear them back to back, to hear them answering the same questions back to back and compare those different perspectives. I know I got a lot out of that. I hope that you did as well. Hope you enjoyed our special here, 2021 Outlook Charting Forward. I want to thank, of course, our experts for coming on the channel. We had Tony Dwyer, Chief Market Strategist at Canaccord Genuity, John Markman, Director of Markman Capital Insight, Gina Martin-Adams, Chief Equity Strategist with Bloomberg Intelligence, Craig Johnson, the Chief Market Technician at Piper Sandler, Samantha LaDuc, founder of LaDuc Trading, Rick Bensignor, founder and Chief Investment Strategist at the Bensignor Group, and of course, Mary Ellen McGonagle, founder of MEM Investment Research. I know all of these analysts are quite active on Twitter, of course, always coming on StockCharts TV. So look for them there, follow them, look for more on StockCharts TV from all of these experts as we get them back on the channel in the future. But big shout out and big thanks to all of you for coming on. And for the viewers, thank you so much for watching. This has been a blast to host. My name is Grayson Roze, Vice President of Operations at StockCharts.com. I hope you've enjoyed our Charting Forward 2021 Outlook here. And remember, we got new outlooks, new specials coming to StockCharts TV almost every month. So stay tuned for the next one. I'm sure we're going to have something coming for you very soon. Until then, thank you so much for watching. We'll see you back here on StockCharts TV very soon. Chart on, my friends. Hey, Grayson Roze here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.